You are welcomed to the preparation of the 3-column cash book. When we looked at 1-column cash book, we looked at a situation where a businessman in the course of his transactions operates by receiving only cash and makes payment through cash. In 2 columns cash book, we looked at a situation where the same businessman in the course of his transactions transacts by receiving cash and also by receiving check, and also makes payment through cash and through check, bringing the bank into consideration. In the 3 columns cash book, we are going to be looking at a situation where the same businessman has advanced. In this case, he does not only receive cash or check or makes payment through cash or check, but also employs the advantages of discount in his operation. In our treatment of the 3-column cash book, the additional thing we are going to bring into consideration will be operations that involve discounts. We have 2 types of discount that we are going to take into consideration. The discount allowed, which can be called sales discount, and the discount received, which can be called purchases discount. Sometimes the businessman buys goods, and because of bulk purchases, he will be granted some allowances in the form of discount. For instance, he may buy goods of $1,000 and be given $100 as a discount. This means that he will no longer pay $1,000 but will pay only $900. The difference between $1,000 and $900 that he paid is purchases discount. Or in order to gain some advantages associated with discount, he may sell goods and receive less than what he is supposed to receive. For instance, he sells goods for $2,000 and receives just $1,800. This means he has sacrificed $200 in order to gain his customers. This form of discount, or this type of discount, is known as sales discount or discount allowed. How do we bring discount allowed and discount received into consideration in the treatment of cash book? We are going to take a equation to bring these treatments into consideration. Before we take down the equation, one may ask, what is discount? Discounts are concession or allowances given to a customer when goods are sold to him, or received from a supplier when goods are purchased from the supplier. The main reason for discount when goods are sold to customers is to induce them to make prompt payment, or to induce them to buy more. The same is applicable when we go and buy goods from suppliers. Making prompt payment, or making payment in time, or buying in a large or larger quantity is one of the advantages of discount. There are also other advantages that are associated with discount allowed and discount received. However, this will be explained as we progress in our studies. For now, let's take equation to lay emphasis on the concept of 3-column cash book. 2021, April 1st, Victory Enterprises commenced business with $7,000 cash, check of $10,000, and machinery of April 2nd, purchase goods with check of $4,000 less 5% discount. April 3rd, sold goods with check $1,500 less 10% discount. April 5th, paid rent with check $500. April 6th, sold goods and received cash $6,000. April 8th, paid for traveling expenses $150. April 9th, sold goods for cash $5,500. April 10th, cash sales $4,500 less 3 whole number 1/3% discount. April 13th, cash purchases $700. April 15th, withdrew check for personal use $200. April 16th, paid for wages with check $80. April 20th, paid for traveling expenses $150. April 22, withdrew cash from the bank $700. April 26th, paid cash into the bank $1,200. April 27th, sold goods to Mark on credit $90. April 28th, purchased goods from Mustafa on credit $75. April 29th, purchased machinery with check $9,000. April 29th again, Mark returned goods valued at $20. April 30th, Mark paid his account with cash $70. April 30th again, returned goods to Mustafa $15. Finally, April 30th again, paid Mustafa on account $50. You are required to prepare a 3-column cash book. Post the transactions to appropriate ledgers and extract a trial balance. To prepare the 3-column cash book, we have to adopt this ruling. We are preparing it for Victory Enterprises. The name must be written. What are we preparing for Victory Enterprises? It is the 3-column cash book. Now, the ruling of the 3 columns cash book is different from the 2-column cash book, just with the inclusion of discount allowed, DISALL, at the debit side and discount received at the credit side, DISREC abbreviation. So we have the date, particulars, folio, discount received, cash and bank at the credit side, and at the debit side we have date, particulars, folio, discount allowed, cash and bank. The inclusion of the discount allowed and the discount received makes it 3 columns cash book. 1, 2, and 3. 3 columns. 1, 2, and 3. 3 columns. Now we begin our operation. Of course, you can see we have opened all the necessary ledgers that will be needed in this operation because we have read the equation and we already know accounts to be opened. For instance, purchase goods for cash will enable us to open purchases account. Sold goods for cash will enable us to open sales account. Paid rent will enable us to open rent account, and so on. It is in this manner that all the necessary account has been opened. So let's go into our operations now. April 1st, 2021, Victory Enterprises commenced business with $7,000 cash check of $10,000 and machinery of $1,300. Now, the owner of the business gave out three things so that the business can start. He gave out cash, check, and machinery. Now, capital account will be opened to represent the owner of the business and be credited with the items given out. Now, the capital account is going to be credited with cash, check, and machinery given out, while on the other hand, the cash book will be debited with cash and check received, while the machinery account will be debited with the value of the machinery received. Of course, machinery is not cash and it is not check and does not go to cash book because the cash book deals with only cash and check transaction. The machinery is in form of asset, in form of property given out. So it goes straight and be debited to the account that takes care of it, and that is the machinery account. Now the capital account will be credited with three items given out: cash of 7,000, check of 10,000 into the bank, and machinery of 1,300. The machinery is not a physical cash, but an asset or a property, and so has nothing to do with the cash book. The cash book deals with only cash and bank transactions. Therefore, the machinery is given to the person or account in charge of machinery account. The machinery account is debited with $1,300 machinery. Source of receipt is the owner of the business, represented by capital. While the cash book or the cashier in the cash office is debited with 7,000 received from capital, the owner of the business, and the bank column is debited with 10,000 received from capital, representing the owner of the business. So in these transactions, the cash and bank account is debited for money received from the owner of the business, while the capital account is credited with cash and check given out to cashier to start the business. April 2nd, purchase goods with check of $4,000 less 5% discount. Now we are going to determine how much that was actually paid and how much was the discount before this entry is made. When we discover the amount of the discount involved, then we deduct it from the actual amount that we are supposed to pay when we purchased the goods. And remember that when we purchase goods with check, the cashier or the cash book will be credited for giving out cash for purchases, and the purchases account will be debited for receiving such amount for the purchase of the goods. So workings 1, actual purchases is $4,000 with less discount received or purchases discount, that is 5% of $4,000. So we have 5 over 100 times 4,000. That gives us $200. So we have 4,000 minus 200, that gives us $3,800. That is the actual amount paid for purchases, while the real value of the goods purchased is $4,000. So we debit the purchases account with $4,000 that the bank account gave out for the purchases on April 2nd, 2021. And the cash book or the cashier is credited with $3,800 given out for purchases, 200. The 200 discount will be shown under discount received column. Now, if you observe, the actual money that was paid out through the bank is not 4,000 but 3,800, while the balance of 200 was received as discount. Of course, what the cashier actually gave out for purchases now on April April 2nd, 2021 is 3,800 and the organization has received 200 as purchases discount. April 3rd, sold goods with check $1,500 less 5% discount. When we sell goods, cash or check is received. Therefore, the cash book is debited with the amount received from sales. While the sales account that makes the money to come in is the giver and has to be credited. But in this instance, the actual amount that the cashier will receive will not be complete due to the discount allowed. So let's go and calculate and find out the amount that is allowed as discount and the actual amount that was received from sales. Workings 2, the actual sales was $1,500 less discount allowed, which is 10% of $1,500, which is 10 over 100 times 1,500. That gives us $150. Then $1,500 less discount allowed of $150 now gives us $1,350. This is the actual amount received from sales by the cashier. So we credit the sales account with $1,500 on April 3rd, 2021. Note that it was the full amount of sales made, $1,500, that was credited to the sales account. Therefore, we go and debit the bank column of the cash book. So we debit the cash book or the cashier for receiving through the bank $1,350 as a result of sales on 3rd April 2021. Of course, if you observe, you will notice that $150 is recorded under the discount allowed column, while $1,350 is recorded under the bank column. If you add $1,350 plus $150 to give you $1,500. However, the actual amount that was received from the sales is $1,350, while $150 has been lost as a result of discount allowed. April 5th, paid rent with check $500. When we pay rent, the cashier gives out money for the rent and is credited, while the rent account that costs the money to go out is the receiver and has to be debited. So we credit the cash book or the cashier for giving out $500 through the bank for rent on April 5th, 2021. So we debit the rent account for receiving $500 from the bank column of the cash book on April 5th, 2021. April 6th, sold goods and received cash $6,000. Now when we make sales, cash comes in and the cashier receives it and the cash book is debited for receiving cash from sales, while the sales account that makes the money to come in is the giver and has to be credited. We credit the sales account on 6th April 2021 for selling goods with cash of $6,000 and sending the money to the cashier. While the cash book or the cashier will be debited with $6,000 received as a result of sales on April 6th, 2021. April 8th, paid for traveling expenses $150. Since the cashier is paying for traveling expenses, the cash book will be credited while the traveling expenses account will be debited for receiving the $150. We credit cash book for giving out $150 for traveling expenses on 8 April 2021. While we debit the traveling expenses account for receiving $150 cash on April 8, 2021. If you observe, they did not mention in the equation that we paid for traveling expenses with cash or with check. Once the equation is silent, that means the payment was made with cash. And since the traveling expenses cost the $150 to go out, traveling expenses account is the receiver and has to be debited. April 9th, sold goods for cash $5,500. Of course, when goods are sold for cash, the cashier receives the amount and is debited, while the sales account is credited for giving out the cash from sales to the cashier. So we debit the 3-column cash book with 5,500 received from sales on April 9th, 2021. And the sales account is credited with $5,500 cash on April 9th, 2021. April 10th, cash sales $4,500 less 3 whole number 1/3% discount. It should be noted that 3 whole number 1/3% is written as 3 whole number 1/3 divided by 100. To convert 3 whole number 1/3 to improper fraction, it becomes 3 times 3 is 9. 9 plus 1 is 10. It becomes 10/3. That means this 3 whole number 1/3 becomes 10/3. Therefore, we can now write it as 10/3 divided by 100. We have it as 10/3 divided by 100. We can now work out our discount by bringing the actual sales, which is 4,500. Discount allowed will be 3 whole number 1/3% of $4,500. This can be written as 10/3 divided by 100 times 4,500. That gives us 150. So 3 whole number 1/3% of 4,500 gives us $150. Therefore, the actual amount received from the sales is $4,350. That is $4,500 minus $150. So in the cash book, we are going to debit $4,350 as the cash received from sales, while $150 will be recorded under discount allowed as the amount allowed as discount. While the sales account will be credited with the full value of sales made, that is $4,500. So we credit the sales account with cash of $4,500 sold on 10th of April 2021. So we debit the 3-column cash book, the bank column, with $4,350 received from sales on 10th of April 2021, while the discount allowed column receives the $150. If you add this $150 to this $3,450, it gives you back the $4,500 that was credited to sales account. April 15th, we drew check for personal use. Now the owner of the business is coming to collect some money for personal use through the cashier in the bank. Now the cash book will be credited for giving out the money to the owner of the business, while the account that represents the owner of the business, known as drawings, will be what? Debited. So in this transaction, we debit the drawings account with $200 and credit the cash account bank column with $200. So we debit the drawings account representing the owner of the business coming to collect check for personal use with $200 on 15th April 2021. We now credit the cash book with $200 given out to the bank column of the cash book to the owner of the business represented by drawings on 15th of April 2021. April 16th, paid wages with check $80. When wages are paid, the cashier gives out money for wages and is credited, while the wages account that receives the money or the value is debited. So we debit the wages account for receiving $80 through the bank column of the cash book on April 16th, 2021, while the cash book will be credited under the bank column with $80 given out for the sake of wages on 16th of April 2021. April 20th, paid for traveling expenses $150. Of course, when traveling expenses is paid for, the cash book is credited for giving out cash for traveling expenses, while the traveling expenses account is debited for receiving. So we debit the traveling expenses account with $150 cash received on 20th of April 2021. We credit the 3-column cash book, the cash column, with $150 given out in respect of traveling expenses on 20th of April 2021. April 22nd, we drew cash from the bank $700. When cash is being withdrawn from the bank for office use, is known as contra entry. The two entries, debiting and crediting, will take place inside the cash book. We are withdrawing cash from the bank for office use. So the money is going out from the bank and going inside the cash aspect of our account. Therefore, the bank from where the cash is coming out will be credited as the giver, while the cash office or the cash column that is receiving such cash will be debited, in line with the principle that we should debit the receiver and credit the giver. The money is being withdrawn from the bank, so bank is the giver. When it's withdrawn, it goes into the cash office, so cash is the receiver. We locate the cash column and debit it for receiving, and we locate the bank column and credit it for giving out cash. So we credit the bank column with $700 withdrawn from the bank. And where is the money being sent to? To cash. It is called contra entry. This occurred on the 22nd of April 2021. Cash was withdrawn from the bank, which means that the bank column gave out the cash. And where did the cash go to? It moved from the bank column inside the cash column, thereby increasing the amount in the cash till by $700. It is represented by C, which shows that it is a contra entry. Of course, the cash of $700 was received from bank on the 22nd of April 2021. It is called contra entry. The two entries are in the cash book because the cash column and the bank column for giving out belongs to the same Victory Enterprises, while the cash column and bank column for receiving also belongs to Victory Enterprises. So it is just a movement of cash from the bank. When this 700 is given out, the money in the bank column reduces by 700. It did not go outside for expenses or for wages or for traveling expenses. The money went back into where? Cash. It was spent because it was going to cash position. The location of this 700 is cash. The location of this 150 is traveling expenses. The location of this 150 here is to traveling expenses. Since the location of this 700 is to cash, therefore it means that the cash column or the cash account is the receiver, and that is the reason why it was debited. Debiting means it received the money, and the money has increased from 7,000 plus 6,000 plus 5,005 plus 700. And as we said, it is called contra entry, and the money was received from the bank on 22nd of April 2021. April 26th, paid cash into the bank $1,200. Of course, cash is being paid into the bank. So now the money is going out from the cash column inside the bank column. When money is paid inside the bank, it means that the business has much money and they want to deposit some in the bank for safekeeping. So when cash leaves the cash office and goes into the bank column, still belonging to the same Victory Enterprises, the movement signifies that cash has given out and bank is receiving. In this form of contra entry, it's the cash account that will be credited while the bank column will be debited, because cash is being paid into the bank. The bank is the receiver while cash is the giver. So we locate the cash column and credit it, and locate the bank column and debit it. So we credit the cash column with $1,200 paid into the bank. We said it's called contra entry, represented by C, on 26th April 2021. Of course, cash of 1,200 was paid into the bank. It means that the bank account is the receiver. So we go to the debit side and debit the bank column with $1,200 received from the cash office on 26th April 2021. Of course, it's called the contra entry. If you observe properly, you will see that the movement is from cash into bank. Previously, when the money was withdrawn from the bank, it was from bank into the cash column. But now, it is from the cash column inside the what? Bank column. If you watch, the money in the bank has increased by 1,200. You should remember that this amount, 4,350, represents cash sales paid into the bank. Every cash sales is supposed to come under the cash column because the money was received in the cash office. But in this instance, the sales was made for cash, but the cash was paid into the bank. So we debited the bank column with 4,350, and the discount aspect of it was taken to the discounts allowed column. On 10th of April 2021, 27th April, sold goods to Mark on credit $90. This transaction is a credit transaction. Mark did not pay, so the cashier receives nothing and is not involved at this point. Remember, we said that the cash book records only cash transaction and bank transactions. Now that goods was sold to Mark on credit, the sales account will be credited for selling the goods to Mark, while Mark's account will be debited for receiving the goods from sales. So we debit Mark with $90 goods received from the sales account on 27th April 2021. While the sales account, representing our salesperson, is credited with $90 goods sold to Mark on April 27th, 2021. In this transaction, sales is the giver while Mark is the receiver. Accordingly, Mark is debited with sales. April 28th, purchase goods from Mustafa on credit $75. The purchases account is representing our purchase person, while Mustafa is representing the person we purchase the goods from. In this transaction, Mustafa is the giver, while our purchase account is the receiver. We purchase the goods on credit from Mustafa. No cash was paid, therefore, the cash book or the cashier will not be involved. The transaction here is to debit our purchase account for collecting the goods from Mustafa, while Mustafa's account that gave out the goods will be credited with purchases. So Mustafa account is credited on the 28th April 2021 for giving out goods of $75 to purchases account. If purchases is personified, it means that the person that received the goods is known as purchases. Therefore, the purchases account is debited for receiving goods of $75 from Mustafa on 28th of April 2020. Of course, the first goods that was purchased, the purchases person received the money from the bank, that is bank column of the cash book, was credited and the purchases account debited. But in this instance of $75, the purchases person was not given any cash or check. Rather, the goods came in as a result of buying the goods from Mustafa on credit. April 29th, purchased machinery with check, $9,000. Now, we are purchasing machinery with check. Money is involved, therefore the cashier is involved, and the cashier will give out the money for the machinery and has to be credited. While the machinery account that costs the money to go out will be debited. Remember that the transaction was made through check, so the bank column of the cash book is involved, while the machinery account will be debited for receiving the money through the bank. So the machinery account is debited with $9,000 received from the bank as a result of purchase of machinery on 29th of April 2020. Remember that the first machinery that was introduced was from the owner of the business, and the capital account was credited with 1,003. While machinery account was debited with 1,003, the source of the receipt is capital account. In this instance of 29th April 2021, the source of the receipt for the purchase of the machinery is the bank column of the cash book. Therefore, we credit the bank column of the cash book with $9,000 given out for the purchase of machinery on 29th of April 2020. On 29th again, Mark returned goods valued at $20. If you watch Mark's account, we previously sold goods to Mark on credit. Some of these goods that was sold to Mark on credit has been returned by Mark. When goods that are sold are returned to us, it is called return inwards or sales return. So the account that we use to receive such goods returned is known as return inwards account. Therefore, our returns inwards account will be debited with the amount of goods returned by Mark, while Mark's account will be credited for giving out part of the goods previously purchased. So we credit Mark account with $20 goods returned on April 29th, 2021. Of course, we previously sold to Mark goods of $90, and now Mark has returned goods of $20, known as return invoice, and has been credited. If you calculate how much Mark is owing us now, it's 90 minus 20, which is $70. Now that Mark has returned goods of $20, known as return invoice, the return invoice account is debited on 29th April 2021 for receiving the goods of $20 from Mark. On 30th April, Mark paid his account with cash $70. On 30th April, Mark paid his account with cash $70. Remember that we said that when goods are sold on credit, the cash book or the cashier is not involved because no cash or check was used. However, in this instance, Mark, that goods were previously sold to, is paying cash. Therefore, the cashier will be involved at this point, as anything that concerns cash in an organization passes through the cash book or the cashier. Therefore, now that Mark is paying his account of $70, Mark's account will be credited for giving out cash, while the cash account will be debited for receiving the cash. So Mark's account that gave out the cash of $70 on 30th April 2021 is credited for paying his account balance. The cash column is debited for receiving $70 from Mark on 30th of April 2021. Of course, if you observe Mark's account, the goods that was sold to Mark on credit was $90 on credit. Mark returned goods of $20 and paid cash at this point of $70. 70, that is cash paid, plus goods returned of $20 gives $90, which is equal to the total goods sold to Mark. At this point, Mark's account is said to be closed and will not appear anywhere in the account again. Of course, whenever somebody's name is used to open an account, it is either the account is a receivable account or a payable account. The name indicates that such account has contractual relationship with the business which has not ended. Now that every cash has been paid, the account is said to be closed. Assuming Mark paid $60, there will be a balance carried down of $10, which will also be brought to the debit side as balance brought down $10 to show that Mark is still owing the organization $10. But now, Mark is not owing a dime. Therefore, at the end of this transaction, this account will no longer appear anywhere. Assuming at the initial stage, the goods were sold to Mark with cash, Mark's name will not be mentioned because the question we just read, sold goods for cash, $90. The name indicates that Mark is owing and has not paid. 30th April, returned goods to Mustafa, $15. Remember that Mustafa is a person that we purchase goods from on credit. The account is called payable account. That is Mustafa's account. Now that we are returning goods to Mustafa, remember that when we purchased the goods from Mustafa on credit, our purchases account representing our purchase person was debited, while Mustafa's account was credited with purchases. Now that we are returning the goods, the purchase account is supposed to be credited as a sign that it has released the goods that was previously purchased on credit. However, in accounting, the account that we use to return goods that are purchased is called return outwards account. So the return outwards account will be used to return the goods to Mustafa. What is the accounting record here? The return outwards account will be credited for returning the goods to Mustafa, while Mustafa's account will be debited for receiving such goods returned. The return outwards account, or the purchases returns account, which we usually use to return goods that were previously purchased, is credited with $15 goods sent back to Mustafa that we previously purchased goods on credit. Mustafa account is now debited with $15 goods received on 30th April 2021 from returns outwards. Finally, on 30th April again, paid Mustafa's account $50. Now we are paying Mustafa for the amount we are owing him. So cash account is involved. Therefore, cash account will be credited for paying Mustafa $50, while Mustafa's account will be debited with $50 cash received. So we credit the 3 columns cash book, the cash column, with $50 paid to Mustafa on 30th of April 2021. While Mustafa's account is debited with $50 cash received from the cashier on 30th of April 2021. If you observe, the goods that Mustafa gave to our purchases account on credit is $75. Goods were returned to Mustafa in form of return outwards $15, and cash was paid to Mustafa $50. The total received by Mustafa is 15 plus 50, which is $65. While the goods that Mustafa supplied is $75. 75 minus 65 gives 10. That 10 will represent a balance carried down, which will eventually come to the credit side to also become a balance brought down. Of course, an indication that we are still owing Mustafa $10. Finally, we are going to balance all the accounts, including the cash book. Let's take down this question on 3 columns cash book. 2021, April 1st, Victory Enterprises commenced business with $7,000 cash, check of $10,000, and machinery of $1,300. April 2, purchase goods with check of $4,000 less 5% discount. April 3, sold goods with check $1,500 less 10% discount. April 5th, paid rent with check $500. April 6th, sold goods and received cash $6,000. April 8th, paid for traveling expenses $150. April 9th, sold goods for cash $5,500. April 10th, cash sales paid into the bank 4,500 less 3 whole number 1/3% discount. April 15th, withdrew check for personal use $200. April 16th, paid for wages with check $80. April 20th, paid for traveling expenses $150. April 22nd, withdrew cash from the bank $700. April 26th, paid cash into the bank $1,200. April 27th, sold goods to Mark on credit $90. April 28th, purchased goods from Mustafa on credit $75. April 29th, purchased machinery with check $9,000. April 29th, again, Mark returned goods valued at $20. April 30th, Mark paid his account with cash $70. April 30th again, returned goods to Mustafa $15. Finally, April 30th, paid Mustafa on account $50. You are required to prepare a 3-column cash book. Post the transactions to appropriate ledgers and extract a trial balance. To balance the cash column of the 3-column cash book, we add the debit side first. 7,000 plus 6,000 plus 5,500 plus 700 plus $70. That will give us 19,270. That represents the total cash received for the period. Now, the total cash paid out is $150 plus 150 plus 1,200 plus 50. That gives us 1,550. So we have a total of 19,270 minus 150 minus 150 minus 1,200 minus 50 gives us closing balance of 17,720. That represents the balance carried on for 30th April 2021. Of course, if you add back the whole figures here, that is 17,720 plus 50 plus 1,002 plus 150 plus 150 is going to give you the same figure as this, which should be 19,270. Then the balance carried on of 17,720, representing the amount that was used to balance the account, will now be given back to the cashier and shown still under the cash column on May 1st, 2021 as balance brought down on May 1st. Balance brought down means opening balance of the fresh month, May 1st. Of course, whenever you see the double line under, it shows that a particular accounting period has come to an end. So the double line you are seeing here shows that the transaction for April has ended. So let us look at the bank column of the cash book. Now, to balance the bank column, we add up the total amount received inside the bank, and that includes 10,000 plus 1,350 plus 4,350 plus $1,200, and that gives us $16,900. Now, to calculate the amount spent through the bank, we have 3,800 plus 500 plus 200 plus 80 plus 700 plus 9,000. That gives us 14,220. bank 17,900 minus total amount paid out through the bank 14,280. Our balance carried down in the bank column will be 2,620. Now if you add everything under the bank column, 3,800 plus 500 plus 200 plus 80 plus 700 plus 90 plus 2,620, which is the balance carried down. The total in this column will now give us 16,900, which becomes the same as the closing figure under the bank column. Plus 9,000, that gives us 14,280. Then, if you calculate the total amount received inside the bank, which is 16,900, minus everything paid out through the bank, which is 14,280, we now have 2,620 as the balance carried down under the bank column. Then if you add up the total amount under the credit side of the bank column plus the balance carried down, which is 2,620, you now have 16,900 as the amount used to close the account, which becomes the same with the 16,900 on the debit side of the bank column. We now have $16,900, which now becomes the same as the closing figure under the debit side of the bank column. Now the balance carried down of 2,620 shown on the credit side of the bank column will now be taken to the bank column under the closed figure of 16,900 shown here as balance brought down for May 1st, 2021. So the same balance brought down controls the cash column and the bank column for May 1st, 2021. Looking at the discount allowed column on the debit side of the 3-column cash book, the total discounts allowed for the period is 150 plus 150, which is brought down as 300. There is no balance carried down for discount allowed and discount received. You just bring down the total of the figures here. Then under the discount received on the credit side, the total discount received figure is 200. Then you bring it down and get it closed here. Looking at what we have done, you discover that the total discount allowed is 300, while the total discount received is 200. It should be noted that if the total cash received is less than the total cash paid out, that is, if the total cash paid out than the total cash received, then the balance carried down will appear on the debit side, while the balance brought down will appear on the credit side. The same is applicable to the bank column. If the total amount paid out through the bank is greater than the total amount received inside the bank, then the balance carried down will appear on the debit side and the balance brought down will appear on the credit side. Now we have finished balancing the 3-column cash book. We are now going to balance other accounts so that we can extract our trial balance. Now to balance the capital account, we add up the total amount given out as capital, which is 7,000 plus 10,000 plus 1,300, which gives us 18,300. Of course, knowing that we are going to make the two sides to be equal, we extend this amount to this place. And now initiate 18,300 as a balance carried down. So to make the two sides of the account to be equal, we initiate the balance carried down 18,300 on 30th April 2021. Then we bring down the 18,300 to be in the same line with the closed figure on the credit side. And we now initiate the balance brought down by transferring this figure at the debit side of the capital account to the credit side of the capital account, 18,300 under the closed figure, and it becomes the balance brought down for May 1st, 2021. Looking at the traveling expenses account, to balance it, the total figure on the debit side is 150 plus 150, which is 300. So we make the two sides to be the same, that is the debit side and the credit side, to become the same, and that becomes the balance carried out. So the figure that can make the both sides to be equal is 300, and that becomes the balance carried down for 30th April 2021. Of course, we bring down the 300 to be in the same line with these closed figures. Then we now initiate our balance brought down by bringing this 300 directly under the closed figure on the debit side, and it now becomes the balance brought down. We now have 300 as the balance brought down for May 1st, 2021. Now we have balanced an account with a credit balance, that is the capital account, and we have also balanced an account with a debit balance, that is the traveling expenses account. I will expect you to do other balancing before I progress. To balance the machinery account, we already have 10,300 on the debit side, so we now initiate a balance carried down, which is also 10,300 because the two sides has to be equal. That is on 30th April 2021. We also bring down the 10,003 to be in the same line with this and have it closed. Then this 10,003, so the 10,300 is brought back to the debit side under the closed figure and is called the balance brought down for May 1st, 2021. Also, the drawings account has a debit balance of 200, which have already been closed here. So to make the two sides to be equal, we take the 200 to the credit side, and it becomes the balance carried down on 30th April 2021. Then the 200 is also brought down in the same line with this closed figure. And finally, the balance carried down of 200 is taken to the debit side under the closed figure of 200 and becomes the balance brought down for May 1st, 2021. To balance the purchases account, we already have 4,075 on the debit side, which is now taken to the credit side as balance carried down for 30th April 2021. The same 4,075, which is balance carried down, is brought back to the debit side under the closed figure of 4,075 and becomes a new balance for May 1st, 2021. Then to balance the wages account, we already have $80 on the debit side. This $80 is taken to the credit side and becomes the balance carried down or the closing balance for April 30th, 2021. The 80 is now brought down to be in the same line with this closed figure. And finally, the balance carried down is brought under the closed figure of 80 and becomes a fresh opening balance for wages for May 1st, 2021. To balance the sales account, the total amount received from sales, both cash, bank, and credit sales, is 17,500. Then the 17,590 is taken to the debit side of sales account and it becomes the balance CD for 30th April 2021. Then the 17,590 is brought down and closed here in the same line with this. And finally, the balance carried down on the debit side comes to the credit side of the sales account under the closed figure and becomes the balance brought down for May 1st, 2021. The rent account has a total of $500 as the balance, which is on the debit side. This $500 is taken to the credit side to make the two sides to be equal, and it becomes the balance carried on for April 30th, 2021. The 500 is brought down here and closed in the same line with this. And finally, since the balance carried on is on the credit side, it comes back to the debit side to become the opening balance or balance brought down for May 1st, 2021. Mustafa account has $75 as the total purchases made from him. From this $75 goods purchased from Mustafa, there was return artworks of $15. Cash was paid to Mustafa $50 on 30th April and on 30th April. Now, the total amount that Mustafa has received or that has been given to Mustafa directly or indirectly is $15 plus $50, which is $65. Since Mustafa has received $65 out of $75 goods purchased from him, his balance remains $75 minus $65. Now the balance carried down, which is the closing balance, is $10 on 30th April 2021. Note that this balance carried down represents the only amount that is currently being owed to Mustafa. Note that this $10 amount representing the closing balance is the only amount we are owing Mustafa at the end of the month. Therefore, it becomes the balance carried down. And if you add 15 plus 50 plus 10, it gives us 75, which is closed in the same line with this. Finally, the balance carried down of $10 is brought to the credit side of Mustafa's account as opening balance of May 1st, 2021. Without any payment of cash made to Mustafa of $50 or any returns of $15 made to Mustafa, the balance carried down would have been $75 and will also become the balance brought down as $75, showing that we are still owing Mustafa the whole amount at the end of the period. The return invoice account or the sales returns account recognized $20 goods returned by Mark and has received it and has been debited. And that is just all it received at the end of the period. So we bring the $20 down here and close, and this $20 becomes the balance carried down for 30th April 2021. The $20 is brought down, closed in the same line with this. And finally, the balance carried down of $20 comes back to the debit side, showing that the only amount of goods received as return invoice is $20 for the end of April 2021, which now becomes the opening balance, that is balance brought down for May 1st, 2021. The return outwards account recognized $15 goods returned to Mustafa on 30th April 2021, and the $15 is closed and eventually becomes the balance carried down of $15 for 30th April 2021. $15 is brought down and closed in the same line with this, and eventually it comes back to the credit side as the balance brought down for May 1st, 2021. The total discount allowed for the period is $300, while the total discount received for the period is $200. There are no balance CDs for discount, as the credit side represents the discount received, while the debit side represents the discount allowed. Now, to open the discount allowed account, since it is already clear that the discount allowed is an expense on the business and that this balance came from the debit side. Remember that it was when we debited the bank for receiving 1,350 that the discount allowed resulted, because the addition of 150 and 1,350 gives us 1,500. So this discount allowed is part of the debit entry that completes this. So what do? We pick the $150 discount allowed plus this $150 discount allowed, which gives $300 total of discount allowed, and take it to the debit side of discount allowed account. And we call it sundries. Now, the discount allowed is debited with $300, which we note as sundries, meaning total of discounts allowed, or a collection of all the discounts allowed. So the total of 300 was collected at the end of the month, 30th April 2021. It should be noted that the total of discount allowed figure, that is $150 plus $150, makes up for the shortage on the debit side of the 3 columns cash book. Remember that when we debited $1,350 here as amount received from sales, the 150 was deducted as discount allowed. However, if you go to the sales account, you will discover that the total amount credited to the sales account is 1,500. That is addition of this and this. This means that the credit side of sales account has recognized $1,500, while the debit side of the bank account recognized only 1,350, a shortage of 150 on the debit side. It is this debit side that has been taken directly to the discount allowed column, which makes up this 300. Of course, it is this 150 from sales on 10th April and the 150 on 3rd of April sales that makes up the total amount taken to the debit side of the discount allowed account. Besides, discount allowed account represents an expense account and have to be debited. Coming to the discount received column, which is on the credit side, the only discount received that occurred was in respect of purchases on 2nd April 2021. Of course, the total goods that was purchased is goods of $4,000. However, when we calculated the discount received, we discovered that the only amount we paid is $3,800, while discount received represented the amount that was not paid. Now, it should be noted that if you go to the purchases account, the purchases account has been debited with $4,000, which is a collection of $3,008 plus $200. That represented the total amount of goods that was actually purchased. However, when the cash was being paid for the goods purchased, it was only $3,008 that was paid. What this implies is that the purchases account has been debited with $4,000, which represents the actual amount of goods purchased. While when check was being paid for the goods, only $3,008 was paid, $200 was received as discount. The implication of this is that the purchases account has been debited with $4,000 in respect of purchases on April 2nd, 2021, while the corresponding credit entry, which is the 3 column cash book, has only been credited with 3,800, a violation of the double entry principle. So in order to complete the shortage on the credit side of the 3 columns cash book, these $200 will be taken to the credit side of the discount received account. As you can see, the discount received account has been credited with $200 on 30th April 2021 under the name Sundries. Now, having credited the discount received account with $200 and debited the discount allowed account with $300, as the discount allowed represents an expense account while the discount received account represents an income account, we are now going to balance the discount allowed account and the discount received account before we extract our trial balance. So to balance the discount allowed account, the total on the debit side of discount allowed account is 300. So we'll bring it down and have it closed as 300. Then this 300 is taken to the credit side of discount allowed account and is called the balance carried down for 30th April 2021. Of course, this 300 has made the two sides to be equal. Then we bring down the 300 and have it closed in the same line with this, since these two figures must also be the same. Finally, the balance carried down of 300 is taken back to the debit side of the discount allowed account and becomes the opening balance or the balance brought down for May 1st, 2021. The discount received account has 200 on the credit side. This 200 is brought down and closed, and immediately it is taken to the debit side of discount received account to make the two sides to be equal. And of course, this is now called the balance CD or the balance carried down for April 30th, 2021. Then the 200 is brought down in the same line with this closed figure and also closed here. And finally, the balance carried down is taken to the credit side of the discount received account and becomes the balance brought down for May 1st, 2021. If you work this balancing, the final balance, which is the balance brought down, still came to the credit side, showing that the discount received account is an income account. On the other side, the balance brought down for discount allowed account, when we finished all the balancing, it still remained at the debit side of the account, indicating that discount allowed is an expense account. To prepare our trial balance, let's begin by collecting the balance in the 3-column cash book. The balance brought down on May 1st, 2021 for the cash column is 17,270, and for the bank column it is 2,620. Now, these two figures will be taken to the debit side of the trial balance. 17,270 on the debit side of the trial balance representing cash account, while 2,620 still on the debit side of the trial balance representing the bank balance. Now the balance carried down in the cash column is 17,720, which represents the closing amount that the cashier will give out for balancing of the account. If you add 17,720 plus 50 plus 1,200 plus 150 plus 150, it will give you a total of 19,270. And that now equates the figure that was used to close the account on the cash column. Finally, this balance of 17,720, that is the balance carried down, is now taken to the debit side under the closed figure of 19,270, which represents the total cash that was received, and now shown as 17,770, which is now the balance brought down for May 1st, 2021. Of course, it should be noted that the same figure that was used as the balance carried down under the cash column to close the credit side is the same figure that was taken to the debit side and used as the opening balance for May. This indicates that at this point, the cashier has been giving back this 17,770, and since the law says we should debit the receiver, at this point that the cashier is receiving this $17,770, the account of the cashier, which is the 3-column cash book, will be debited under the cash column as opening balance for May. Now, to prepare the trial balance, we are going to pick the cash balance brought down, which is $17,770, and also we pick the bank balance brought down, which is $2,620. These two figures for cash and for bank will be used at the debit side of the trial balance. 17,770 representing the cash balance and 2,620 representing the bank balance. Now, to prepare the trial balance, we are going to collect, firstly, we are going to collect the cash balance and the bank balance. The balance brought down of cash in the 3-column cash book is 17,770 and it's on the debit side. We are going to post this to the debit side of the trial balance. Also, the balance brought down for the bank column of the cash book is 2,620 on the debit side. We are going to pick this $2,620 to the debit side of the trial balance representing the bank balance. So we have the trial balance of Victory Enterprises. We have the particulars, the debit side and the credit side, and we have the dollar sign. Of course, the balance brought down for cash is 17,720, which is on the debit side, and also the balance brought down for bank column is 2,620, which is also on the debit side. So we place them on the debit side. We have the capital account. The balance brought down is on the credit side, 18,300. So we take the capital to the trial balance and place the figure on the credit side, 18,300. We also have the traveling expenses. The balance brought down is $300 on the debit side. We take the traveling expenses to the trial balance and place the balance on the debit side. We have machinery account. The balance brought down is on the debit side, 10,300. So we transfer it, machinery, under the particulars, and 10,300 on the debit side. We have the drawings account. The balance brought down is on the debit side, 200. We take drawings to the debit side of the trial balance, $200. We have the purchases account. The balance brought down is on the debit side, 4,075. So we take the purchases account to the debit side of the trial balance, 4,075. We have the wages account. The balance brought down is 80 on the debit side. We take the wages account to the debit side of the trial balance, $80. We have the sales account. The balance brought down is on the credit side, 17,590. So we take sales account to the trial balance and place the figure on the credit side, 17,590. We have mark account. Mark account has been closed because we sold goods of $90 to Mark, and Mark returned goods of $20 and paid cash of $70, which has been acknowledged by the cashier. Now, the account cancels itself out because Mark has no other contractual relationship with Victory Enterprises. Then for the rent account has balance brought down on the debit side, 500. So we take the rent account to the debit side of the trial balance, 500. Then we have Mustafa account. Mustafa account has a balance brought down of $10. So we take Mustafa's account to the trial balance and place the figure $10 on the credit side. We have the return inward account. The balance brought down is 20 on the debit side. So we place the return inwards account on the debit side of the trial balance, 20. Then we have the return outwards account. The balance brought down is 15 on the credit side, so we take the return outwards account and place the figure on the credit side of the trial balance, 15. Then we have the discount allowed. The balance brought down is 300 on the debit side. We now take the balance of discount allowed, 300, to the debit side of the trial balance. Finally, we have discount receipt account, which has its balance brought down on the credit side, 200. Then we transfer the discount receipt account balance to the trial balance and place it on the credit side. Of course, the logic in placing the entries on the debit side and on the credit side depends on the account. Any account that is balance brought down is on the debit side should be placed on the debit side of the trial balance. And any account that is balance brought down is on the credit side should be placed on the credit side of the trial balance. At the end of the day, we add up the debit side and add up the credit side. If the double entry concept or principles have been obeyed, then the debit side and the credit side of trial balance are expected to be the same. Let's add. We have 17,720 plus 2,620 plus 300 plus 10,300 plus 200 plus 4,075 plus 80 plus 500 plus 20 plus 300. That gives us $36,115. Then the credit side, we have $18,300 plus $17,590 plus $10 plus $15 plus $200. It gives us $36,115. We show that we have completely obeyed the double entry principle by debiting and crediting the same amount at the same time. If you observe properly, you will discover that we dealt with some credit transactions. We sold goods to Mark on credit and also purchased goods from Mustafa on credit. These transactions are called credit transactions because no cash was used in these transactions and no check was also used in these transactions. There was also return inwards and return outwards. We have dealt with this transaction because we are at our foundation stage. When we go into the treatment of journals, you will understand more about credit transactions. For instance, we sold goods to Mark. Mark is just a person. It is possible that we sold goods on credit to 10 customers. Now, it is in the journals that the whole credit transactions are going to be summarized, including every return inwards. Also, we purchase goods from Mustafa on credit. It is possible that we have 20 suppliers and a lot of return outwards are involved. It is in the journals that we're going to summarize these transactions before transferring them to the appropriate ledgers. However, for the sake of your foundation knowledge, we have simplified credit transactions by taking into cognizance just one supplier and one customer. As we progress in our studies, we are going to bring a lot of things into consideration, and this will enable us to understand more and understand better. To balance the three-column cash book of Victory Enterprises, we are going to consider the cash column first. That is the receipt side of cash and the payment side of cash. Now the total cash received in the period is 7,000 plus 6,000 plus 5,500 plus 700 plus 70. That gives us a total of 19,270. Then less total cash paid out, that is 19,270 minus 150 minus 150 minus 1,200 minus 50. That gives us $17,720 becomes the balance carried down for 30th April 2021. It represents the cash that the cashier will bring out for balancing at the end of the month. Now if you add the total figure, credit side of the cash book, you now have 150 plus 150 plus 1,200 plus 50. plus 17,720. That gives us 19,270. The same with the closed figure at the debit side of the cash book. Then this balance carried down of 17,720 is taken back to the debit side of the 3-column cash book under the closed figure of 19,270 and placed here. Then the 17,720 eventually becomes the balance brought down for May 1st, 2021. Of course, this amount represents the net cash received in the period, which will be taken to the debit side of the trial balance. To balance the bank column of the 3-column cash book, we add the total amount received in the bank. That is 10,000 plus 1,350 plus 4,350 plus 1,200. That gives us a total of, so this 16,900 represents the total cash received in the bank. Then we deduct from it the total cash paid out from the bank, that is 16,900 minus 3,008 minus 500 minus 200 minus 80 minus 700 minus 9,000. That gives us a total of 2,620. Now this 2,620 represents the balance carried down for the period. And if you add 2,620 plus 9,000 plus 700 plus 80 plus 200 plus 500 plus 3,800, it's going to give you a total of 16,900, which is equal to the total amount received in the bank. So what are we saying? The total amount received in the bank minus the total amount spent through the bank will give us the balance carried down. And when you add the balance carried down plus the total amount that was spent, it gives you back the total amount received in the bank. Now this 2,620 is taken to the debit side of the 3-column cash book under the closed figure for the bank column, and it becomes the balance brought down for May 1st, 2021. Of course, this 2,620 represents the net amount received in the bank. This 2,620 will be taken to the debit side of the trial balance to represent the bank balance for the period. Discount received column and the discount allowed column. There is no balance carried down for these columns. What we do is very simple. We add the total amount allowed as discount and place the figure here. That represents the total discount allowed. And then we add the total amount received as discount and place it at this column. That represents the total discount received. These figures will be transferred to the appropriate discount allowed account and the appropriate discount received account as we progress. Therefore, under the discount allowed account, 150 plus 150, which is a total of 300, will be transferred to the discount allowed account. While on the discount received side, 200 will now be brought down here as the total discount received and will later be transferred to discount received account. Remember that the discount received account represents an income, while the discount allowed account represents an expenses.